Hey guys, welcome to Lunar Beaches Crypto, where we ride the waves of the crypto market all the way to the moon. In this video, we're going to be going over the market structure shift or change in state of delivery. So, first thing we're going to do is we're going to identify the market structure shift, how to identify it. I'm going to show you how to make plays off of that, and I'm going to show you when you should expect a market structure shift so that you can anticipate it. And as you're anticipating it, you're going to look for the market structure shift. You're going to look for these particular patterns to play out. So starting off, I'm on the Bitcoin 1 minute chart. Okay, so with the market structure shift, you're going to be looking on the 1, the 2, and the 3. Sometimes a 5, but mostly those 3. This happens mostly on those time frames: the 1 minute, the 2 minute, and the 3 minute. You really want whatever is the cleanest, and then you play off of that one. Now, the market structure shift is a change in your market structure. So when we see price put in this low here, and then this high here, and then come down and take out this low, what we are looking for is for some type of fair value gap created in the leg that broke this low right here. So, do we get some kind of fair value gap? We could say that this is a fair value gap. It's not the cleanest, but we do have the space between this bar and this wick, and that is exactly where we get into. So we've got a high, a low, a higher high, and then a lower low. We also took out this low right here. So we're clearly seeing a change in how things are developing. Now, this is with the benefit of hindsight, but if we are anticipating the move to the upside, then we can anticipate that the price will then move to the downside. So let's go to the 1 hour, and I'll show you where this is taking place. I'll just go ahead and draw a nice little box around it. This will end up being really little. So let's go to the 1 hour. So you can't even see it. But this right here is where that market structure shift occurs. Let's go down to the 15 minute. Right there. See the yellow box that I drew? So that is where our market structure shift occurs, and then you can see we come down right after that. So what has happened? What do I have marked off and why? Well, let's just go ahead and clear it up. And let's grab a fib. And for this strategy, all I use is the 0, the 1, and the 0.5 fib levels. 50% retracement. So this is the previous week. Okay, this is the previous week range. Pretty obvious. We've got a high and a low, and then we have a retrace. Now, what I did was I took this high and came down to the midpoint and created another range. And then you can see that we came right up to the midpoint of this upper range. This upper range is known as your premium. So this is where price is expensive. And down below is our discount down here. Now we came up and got into premium. And we also got into this premium area. So this is where we are looking to possibly see a change in market structure, a shift in market structure to come back to the downside. Because we are in premium price of this previous weekly range, and then we push down to the downside. But before that even occurs, we're trying to make the play right here. So what else do we have? So if we look to our left, we can see that we take out this high here. And at least on Binance, we took out this high as well. So those were those two dash screen lines at the beginning, were these two right here. The magic occurs right here. And then we come down. So let's go back to the 1 minute. And let's take a look at that market structure shift again. And again, this is more like of a change of state of delivery because we are going from this big bull move here, this big, I don't know what else to call it, this big bull move here, and then we change our state of delivery, meaning, you know, we're delivering upwards price here, and then we're delivering downwards price here. So prices has shifted. The order flow has shifted from a bullish order flow to a bearish order flow. So we break this down, come back up, fair value gap. Now how I've been playing this is I just enter at the very first retrace back into the fair value gap, and then I'll aim for lows. The next low, you have a low here, and you have a low here that gets taken out here, and then we retrace up, and then we continue lower. Now this is that first high that we took over there to the left, and we come about all the way back down to that, and we actually continue even lower. So this is something where with proper risk management, at some point you could get rid of your stop loss and let things ride and just have like a trailing stop. And then I would definitely get out down here. Once we come down to that midway point of the range, that's when I would get out. So if we zoom out, we can see that this is the midpoint of this whole range right here, that previous range. Like zoom out even further to the 1 hour, that's right here. So that is that whole move right there. Then we get this retrace a little bit to the upside. So let's go ahead and remove drawings, and let's see if we can see a way to get in here. Now we do have this fair value gap. You see that right here, and we do get into that. So that's just one thing. We can go down to the 3 minute, go down to our blue box, and see this is how price is reacting. We get into that fair value gap and immediately reject. could have entered there. There's also an order block right here. Or right here. No, right here. No, right here. No, right here. This one right here. Why this one? Because these are the last up move candles before the big move down. So this is price coming in, the market coming in, pushing price to the upside for a little bit of relief, and then the big push down. So I would just go from the opening candle of this order block, and there's our bearish order block, and that is exactly what we get up to. Now, a lot of people think that an order block is just the last candle before the move down, and if you thought that, you would have missed it. But it's not. And we always go off of the opening of the order block, not the close. Okay? Now, I can take this range as well, but this isn't going to hit a 50%. So even if I did take this, it does hit it. Okay. So 50% of this range as well, come up to it, get a reverse out of it. And what do we have? We have this low. It gets taken out right here. Did we create a fair value gap? Yes, right here. We get right into that fair value gap, and then we continue lower, breaking this low. From this high to this low, 50%. It's all about the ranges and being able to identify these ranges and then seeing that shift. Now this one we would want to be in already here. This doesn't really offer up anything on the 1 minute. Let's see if it offers anything up on the, or on the 3 minute rather. Let's see if it offers up anything on the 1 minute. Gotta find where we are. There we go. So we're right here. There we go. Now this might not offer something on the 1 minute. I don't really see it. So we do break this low here. So we push up and we break that low. Where do we have? We don't really have a fair value gap. We don't come back up into it. So maybe, I mean, sometimes you just miss a move, okay? Sometimes you just miss a move and you don't get to get in. We don't just want to jump in because we hit the 50%. We want to see that shift in market structure, just to be clear. Now, something that we can see and anticipate is the fact that we have this buy side liquidity up here. Okay. We've got these equal highs over here. So we kind of anticipate these to get taken out. And they do get taken out right as we are going for that 50% retracement of this range. So we push up and we get that shift. There's not really any time for you to get in. There might be literally some on the seconds chart, but we're not going to get into that. But we do have this buy side liquidity that we would expect to get taken, and we even see us come up, engineer some liquidity. We push down and then push up. Now on this push up, you're going to have a lot of people going long. And we know that. We can anticipate that. We know that a lot of people are going to go long here. Why? Because price is breaking out. They see resistance, resistance, resistance. But when we break resistance, they think change in the trend when it's not a change in the trend. It's actually just a run on liquidity. So we have buy stops or sell stops? No, buy stops resting above here. Price pushes up, people buy. And then reverse. Now we have this consolidation range prior to the move up that we fall out of, taking out this low, and then push up. This happens so often. This consolidation, push down, push up. This is almost always a run on liquidity that will reverse. Your consolidation, bumping up against old highs, bumping up against your buy side liquidity. You've got your equal highs up here, which I love equal highs because equal highs love to be taken out, and equal lows as well. And you also have these right here that we kind of consolidate a little bit on top of, but it's not really necessary for this lesson. What's important is that we do get this consolidation right below this level here. Why? Because some people may see this as resistance, but when it breaks up above it, people think that that's a change of trend. I've already said it. I just want to kind of hammer that home a little bit. So we can take this upward move here, and we can just use that as our range. But I do like to fit in as many highs and lows as possible as well. Either way is good. All that matters is that we see the drop below and then a push higher. And then this low right here, we want to see that one get taken out. And we do. And we do. So that's what we look for on our market structure shifts. Zoom back out. Now let's remove all these drawings and let's take this range again. Let's take this. And we can see we revisit the midpoint of this range again later in the week on Thursday. So let's go ahead and zoom in to this area here. Start at the 3 minute. I've been finding more success on the 1 minute with this strategy, but it's all about whatever's the cleanest, whatever gives you the cleanest looks. So this is that move. So we're coming up to the 50 percentile. We're back into premium. So we want to be looking for that shift in market structure. So we do have this low here and then this high. And then on the leg that takes out this low here, why am I taking this low? Because it's a down candle. And then it pushes higher. Okay. So in this leg here, I'm looking for a fair value gap. Not really a fair value gap there. So what I want to see now is maybe an order block. Don't really have any order blocks. Do we enter? I wouldn't. Let's go to the 2 minute. Now this is a 3 minute. My bad. This is a 3 minute. So nothing there. So let's go down to the 2 minute. Hey, let's edit that out, Bob. Kidding. I'll leave it in there. I'll leave my screw ups in there. Now, what the heck happened? So we revisit later in the week on Thursday. We're all the way over here. Here we go. It's this one right here. All right, so now we are on the 2 minute. Can we find anything on the 2 minute? Let's see. We have this low here, then the push higher. We create fair value gap here, but we still don't get to that fair value gap. Do we miss it? Well, we have one more. This is kind of why I've been preferring the 1 minute time frame on this. All right, so now on this one, this is what I have here. Instead of entering over here, now I have fair value gap that I can play right here. Gap. So we come down, we close this candle here, and then we come right back into that gap, and then we reverse. If we look over here, I can see this 3 candle move to the upside here that takes out this high. I would consider this an order block. So we get up into that once and twice. Now if we take these candles here, this is actually right there. These 2 down candles here, order block. These 2 down here before you get that last push to the upside. Scratch this being an order block. I don't know what I was thinking, but when you are bullish, your order block is going to be your red candles, or in my case, the white candles. So there's our order block. At least a 2 candle move, at least 2 candles that leads to a run on price or a change in the state of delivery. So that's what I'm always looking for. I'm always looking for it, and it's kind of like a cluster, so it's kind of almost obvious that this is an order block. Okay. But the important thing here is that we come up to this 50 percentile of this candle right here. Okay. And then we reverse. Then we come right back up to it and we reverse again. And then we continue lower. So that's just a little bit on market structure shifts. I will put out more videos regarding this and really just be going over this in like Discord and whatnot. We can find the market structure shifts. The bullet market structure shift is the exact same thing, except in a bullish manner. Oops. So let's go ahead and zoom out real quick. I'll do a bullish one real quick, and we will wrap out the video. All right. So I want to take that same range. It's going to be this range here. So this is the previous week range. Okay. Now, what I'm looking for a market structure shift to the downside is we want to see that a run on liquidity like this. Okay, now this one doesn't take out this low here, but that's fine because as long as we're taking out one of these lows over here, once we take them out, we want to see that shift in market structure. And we actually do see it right here. So let's go ahead and get in. Let's go to the 1 minute. Right here. So we've come down into that old low, and we are looking for that shift in market structure. We're on the 1 minute. First things first. First thing you notice, we have these internal highs in here. There's 3 of them. You get a 3 high move like this, and then down, and even when you're coming to the upside, you can get a 3 candle move and then down, or and then up rather. Sorry, my bad. 3 up moves and then consolidate and then break through. And then you get your market structure shift and move to the downside. Kind of looks like a middle finger. All right. So we break these highs. And what do? We create a fair value gap on those highs. We come back into that fair value gap. And if I go down to the, well, if I pick, I can, there's one here as well. And there's one here, but we don't come down to that one. So let's go to the 2 minute and see if we can get a cleaner look on this. Let's see right here. See if we get a cleaner fair value gap or something that we can play off of. So yeah, we do right here. So there's 2 minute, pretty clean. 2 minute worked out on this one. So you've really got to, it's going to be at your discretion. But for me, this was a lot cleaner than the 1 minute. And I know people are going to say, well, you just changed it because it didn't hit what you wanted to see. Well, you could see there were like multiple fair value gaps and in like little bitty candles, and it just wasn't good. Now we could play off, yeah, there's a fair value gap here as well that you could play off of. Now with these, I would just put, that's the wrong thing. I would just put a long position at my entry or at my fair value gap at the top here, and I would come down and go below the first candle of the fair value gap. Now on this one, I would rather, to help me with my risk to reward, I'd rather play off of this one. First candle, second candle, third candle, stop loss just below the first candle, bring this down, and then we aim for highs. So my first high is going to be this one, then my next high is going to be this one. Ultimately, I'm looking for another pool of liquidity, so we have a fair value gap here and come across, and that is exactly where we get to over here. We actually get up into this price range right here, from here to here. Bang. Then we get a little bit of a market structure shift. Imagine that. We got a 50% level, get above it, break down below right here, get a little bit of a return back up, but we don't get up to a fair value gap or anything. So it's probably not something that you could play. And I probably wouldn't play it either because we're not really taking out any highs or lows. Because that's where this that's where the market structure shift, the highs and the lows of a range, that's where you really want to see the shift happen. Not necessarily in the middle of the range, but you can play those as well, as this video has been mostly just the middle of the range of ranges. But you can also look for those market structure shifts whenever they take out range lows and range highs. So that's what you could be looking for. But anyway, seems like this video has gone on for quite some time. I did not expect for it to run on for this long. But if you did enjoy this video, please hit that like button. If you are new to the channel, hit that sub. Leave a comment down below. Tell me what you think. This is my first time explaining this. So I did the best that I could. So yeah. Thank you guys for watching. And I will see you on the beautiful beaches of the moon. Ride the waves. Peace out.